What's up, everyone? Welcome back to AA Stock Talk. Today we're here with a new video. The topic is dividend stocks for 2019. I am Tommy. This is
Aaliyah.
all right. Do you want to go first or you want me to go first?
You can go first.
I'm gonna go first.
Yeah,
Okay, so the first stock that I chose was oil and gas, and it is Exxon. Exxon is currently trading at $82. The dividend is 4.6%, 4.06%. And this is extremely high when you compare it to the average dividend yield across the sector, which is 2.22%. And so that's a pretty good dividend that Exxon is giving out. The cash amount that they pay out each quarter is 82 cents per share. Another good thing about Exxon is they consider this to be a dividend aristocrat stock, meaning that they've been giving out dividends for over 25 years. And in fact, Exxon has been giving a dividend out for over 36 years. So that's pretty impressive. That's a good sign. Some of the advantages of Exxon is it's a low cost capital. They have a healthy cash flow. They have a huge market cap. It's diversified operations, and they have a very good reputation. And the last thing that I like about them is what they're well known for is their ability to return large amounts of capital to its shareholders. So normally when companies, when they have a profit, you have some companies who would take that money and invest it back into the company due to whatever strategy they have at the time. If they want to grow, if they want to expand. But Exxon, they're making so much money, and they're just like basically a global giant that they are able to give a lot of capital back to their shareholders. So that is a good sign right there for Exxon. I almost invested. It made me think about my portfolio. Like I may want to get into this company the way they take care of their shareholders.
Going on to my stock, my first pick would have to be AT&T, because this is a highly popular company that's been here for a while. It's a blue chip company. AT&T, they have a dividend yield of 6.61%. So that's such a high dividend yield compared to like other stocks. And thinking about how AT&T is growing right now, it's a telecommunications company, but right now they're kind of turning into like a big like conglomerate entertainment company. They just acquired Time Warner Cable, so they have that going for them, and they have those synergies going. But AT&T right now, they're paying a 6.61% dividend, like I said, with a payout ratio of 58%. And so basically what that means is a payout ratio is how much of your profits are you giving out in the form of dividends. So right now, AT&T is giving out 58% of their profits in the form of dividends. So they're giving a large amount, but they still have room to grow that dividend. So I think this is an amazing like dividend company. A lot of people use it as a dividend company for their portfolio, and I'm looking into this company right now. So that's my first pick is AT&T, big blue chip company.
Hey, AT&T.
AT&T.
Hey, guess who invested in AT&T?
Who?
You stole my company, by the way. But anyway, that's all right. That's all right. That's okay. But my second dividend stock, hold on.
Yeah.
Hold up.
Walmart. Wow, you have to bring out. All right.
Yeah, gotta bring out the visual. I want them to see it. Walmart. They trading at $101. The dividend is 2.17%. Like I stated earlier, the sector average is 2.22%. So they're below average, but I would definitely like to make the case to why we still invest in this dividend stock. The cash amount is 53 cents. The dividend growth is 44 years. So just think about that. 44 years, Walmart has been given a dividend. And not only that, but throughout the years, the dividend cash amount has been increasing each year just over time. And it's just like a steady growth. And so I like that about Walmart. I think they just went up to 53 cents, matter of fact. And some of the advantages to Walmart, y'all know the rival is Amazon, your company. But so Amazon, what they did last quarter, they reported that for their Prime members, if I'm correct, they're going to start doing 1-day delivery, right?
1 day, yes.
Right, yeah, 1-day
For Prime
delivery.
members, yeah.
Yeah, for Prime members. So today Walmart tweeted, they tweeted that 1-day free shipping without a membership fee, because Amazon charges the little membership fee, but Walmart is saying that we're going to do 1-day delivery for free without the subscription. So that's the advantage for Walmart. Another thing about Walmart is 90% of the U.S. population lives within 10 miles of Walmart. So Walmart is just right there. It's just so convenient. And Walmart is just doing big things, and I like them. And I would definitely consider, if you're an income investor, dividend investor, retail investor, any type of investor, I would add Walmart to your watch list.
Yeah. I think it's important for any type of investor to like kind of look into these dividend companies if you're seeking continual income. So just these companies that we're saying right now, I suggest you like look them up and like, because these are quality companies. But the next one I actually want to go into is not actually a company, but it's kind of a group of stocks right now. It's REITs. And what that stands for is Real Estate Investment Trust. And basically what these do is these are companies that own or finance income producing real estate. So it's kind of an indirect way of having your hands in real estate. So you don't own any properties or anything, but you own the companies that do. So you're entitled to their income. Especially for REITs, they have this rule where they have to pay 90% of their taxable income to shareholders in the form of dividends. So usually a lot of them do have high dividend yields. And so I suggest you look into REITs, into quality REITs. There's so many different types of REITs. I was just looking into a cannabis REIT. I wouldn't suggest that, but just look into like different quality REITs. There's so many different ones out there right now. So that's my second pick is REITs. They pay a lot of them pay a good dividend yield.
Speaking of REIT, what happened with your last REIT?
My last REIT. Okay.
The cannabis. Nah, you don't have to talk about it. It's okay.
No. Listen, I want to say there's so many different REITs out right now. The one that I was looking into because the cannabis space. This one is called IIPR. That's the ticker symbol. And so this was an interesting read because they charge people to lease out their buildings and warehouses a large sum of money just to lease it out and rent it out. But the thing about that is their cap rate is so high compared to other companies just because this is still an illegal and gray area field that they can charge these high prices to these tenants. So it was just something that I thought about and was like looking into. But just in REITs in general, just look into different REITs. Don't look into like speculative ones like that one, but like more established blue chip. Because what I'm promoting right now is blue chip companies. Blue chip companies.
Listen, I got y'all. Y'all don't have to go blue chip. I got y'all. But anyway, getting into the last, are we doing 3?
Yeah.
We're doing 3. Okay, getting to my last one. Hold up. I got some. Hold on. Oh.
Wow. Oh my God.
Oh.
This guy.
Oh.
This guy.
Oh man.
This guy.
Wait a minute.
All right, Warren Buffett.
Hey, that's who I look up to.
Sell it.
Oh wait, let me keep it. Dang. We're gonna talk about it as I go.
All right, Warren Buffett.
Coke. Trading at $48. They got a dividend of 3.41%. That's above the average. The cash amount is 40 cents per share. And just a little bit about Coke. My video then. See, that's why I don't fool with Zoom.
Zoom just went public.
Oh man.
Long Zoom.
I got a bad review. All right, so Coke, let's just dive into the business a little bit. Coke has been around since the late 1980s. No, the late 1980s. I'm gonna have to redo that.
It's fine. We keeping this in.
Huh?
I said we keeping this in. Keep
We
going.
keeping this in?
Yeah.
Oh man, see how she do me? That's messed up. I can't redo it. You know what? It's okay. We're gonna get into it. All we need to know is Coke has been around for a long time. But they have a real good business model. Innovation. They have over 400 different brands in 200 different markets. They have an intelligent distribution network. What they do is, one of the things I was reading is, they go to places where other companies don't think about selling. So Coke, they went into Africa. They went into Africa continent, and you could go out in the middle of nowhere and you will find you a Coke. Other companies wouldn't dare to do that, but you will find Coke there in the middle of nowhere. So I like that about Coke. Another thing about Coke is recession proof. Y'all go back to the financial crisis. Coke was just cruising on through. Price probably dropped just a little bit, but they cruise on through. They
Yeah.
saying Coke is recession proof.
I
So
want to bring up something that I think is very important, very interesting. When you're looking into like different companies, like I think one thing to do is like look how they performed in a recession, how they performed in a market downturn, and things like that, like their cash position, dividends, they stop their dividend, things like that. Are they over leveraged right now? Because listen, we're in the late stages of the economic cycle. There's different things going on. Just have what we
hey,
call is like blue chip
hey,
recession proof that will last you 20, 25 plus years.
hey. I mean, it was my turn.
Go
You,
ahead. Go
you just,
ahead.
I said recession, and it just triggers on me. God, you know what? I'm gonna end with this.
Recession. No, I'm not saying there's gonna be a
I'm,
recession.
I'm gonna end with this. The last thing I'm gonna say about Coke is they got the secret recipe. Competitor advantage,
Yeah.
economic moat. Coke got it.
Hmm.
Oh, I own them too. But yeah, that's my last one.
All right, and so my third pick is a pharmaceutical company, and it's a company that I've kind of been keeping an eye on. I'm not in this company, but I've just been keeping my eye on it just because of the different things that's going around surrounding this company. This company, they make a lot of different blockbuster drugs, but they're facing kind of a little bit of struggle right now. The company is called Abbvie, ticker symbol ABBV. And basically, the dividend yield of this company is 5.33%. They have a payout ratio of 54.5%. So they're paying a high dividend. One reason I like this company is they have the key drug Humira, right? Humira, I see the commercials everywhere. You see the commercials everywhere. That's kind of like their key drug. Their patent for the drug, I think, ends in 2023. And basically what this is, the problem with that is once that patent ends in the US, other pharmaceutical companies can begin making biosimilar drugs that can compete at a lower price with Humira. And so that's kind of a problem that Abbvie is facing right now. So they have a lot of things in the pipeline, and this could be a great stock pick as far as pharmaceutical industry goes for the next couple years, because they have a lot of things in the pipeline right now. That's kind of what they're ramping up to do. They're facing biosimilar competition in Europe and other countries. So it's just kind of like something to look into, and they also they may have high growth in the future, and they also pay a dividend right now. So it's just a company that I've been keeping my eye on, and I love dividend companies. So that's my third pick, Abbvie.
All right, so yeah, you guys, those were our dividend stocks. All right, so disclaimer, I am not in any of the stocks except for Coke. Make sure to always do your due diligence, your research on any stock before you get invested. If you like this video, make sure to like and subscribe. You can find me on Instagram at cannabis_stocks_talk, and you can find Leah.
Stocks with Leah, all one thing.
Make sure to comment below. Let us know, you guys, dividend stocks. Let us know what you think about dividend stocks. Also, let us know what other videos you want us to do, and we'll do it for you.